So Singapore's Straits Times Index hit a record high last week and is now sitting at above 4,300 points. It's up over 14% so far in 2025 and is actually beating out the S&P 500 index's 12.7% return. But remember, the Singapore dollar is strengthened by over 6% versus the US dollar in 2025. So that's an even bigger gap in performance in Singapore dollar terms. So here are three big things that are driving the Singapore stock market to new highs. Number one, DBS outperformance. There's no escaping how much of an influence Singapore's biggest bank has on the Straits Times Index, given it only comprises of 30 stocks. In fact, DBS alone makes up over 25% of the index, and the stock recently hit a record high itself at over $53 per share. With DBS up 17% so far this year on the back of strong earnings and investor interest, it's no surprise it's carried the market with it. Number two, safety amid chaos. Singapore is seen as a mature but reliable market. While many investors might view it as boring, that's been a massive advantage in the world given all the chaos we've seen, from global trade wars to geopolitical tensions. Singapore's AAA credit rating means government bonds remain one of the safest in the world. And well, the US, we know that the country is massively in debt. I mean, look at PM Lawrence Wong and President Trump. You couldn't find two more contrasting political figures. Finally, number three, support for local stocks. There's the Equity Market Development Program, otherwise known as EQDP, that was announced by the MAS earlier this year and is aimed at supporting the growth of the local stock market. At $5 billion in size, with $1.1 billion already allocated, the program has already helped sentiment for Singapore stocks improve. Nowhere is that more obvious than through the share price of Singapore Exchange, which is hitting all-time highs. So there you have it, three big reasons why Singapore's stock market is hitting all-time highs. With all the uncertainty out there in the world, the appeal of Singapore to investors is likely to last, especially amid this new world order. For more personal finance and investing insights, do give me a follow here or subscribe to my YouTube at Tim Talks Money.